Today, we are going to tackle a huge signal that the global economy is sending us. It's a massive, synchronized rally across the entire metals market. Now, this is a really powerful message, and we're here to break down what it's all telling us.
So it really all started with this one simple observation. Something unusual happened back in January. And look, it wasn't quiet, it wasn't gradual, it was a sudden, decisive shift that made everybody sit up and pay attention.
And this wasn't just, gold having a good day. As you can see here, we're talking gold, silver, copper. The whole complex shot up together in this really rare, synchronized move. I mean, almost everything climbed to multi-year highs. This was not random. This was a coordinated message from the market.
Look, so most people just watch the markets go up and down. This channel is for people who want to understand why they move. If you want to stay ahead of that curve, go ahead and subscribe. So just how big of a deal was this surge? Well, prices didn't just climb a little, they absolutely shattered records. This wasn't some simple market fluctuation. It was a powerful signal that a major shift was happening, a direct response to a world that feels more and more unsteady. And here is the really crucial part. The market is not looking at this as some fleeting short-term thing. No way. Long-term price targets, we're talking all the way out to 2026, even 2030, were revised upward across the board. That tells you the market believes we are seeing a fundamental structural change. So why? Why did this all happen? Well, when the world feels uncertain, capital does what it has always done. It runs for cover. It looks for a safe place to hide. And that is exactly what we saw. A huge flow of money running toward hard assets, looking for shelter from what feels like an economic storm.
So let's break down that why. This wasn't caused by just one thing. Oh no, this was a perfect storm really, created by three core drivers hitting all at once. You had rising geopolitical tensions all over the globe, a growing sense of economic fragility, and this deep, deep uncertainty about what governments are going to do next.
And to get a handle on that policy uncertainty, you have to look beyond what's happening right now. Okay, so the Fed held rates steady, but the market was already looking way ahead, and it started pricing in one, maybe two rate cuts down the line. It's that anticipation of what's coming next that's driving all the action today.
And this all ties into a classic economic relationship. It's a textbook play. As all these concerns start to weigh on the US dollar, it gets weaker. And what happens then? Well, hard assets like metals, which are priced in dollars, suddenly become a whole lot more attractive to buyers all around the world.
Okay, now let's zoom in on the real centerpiece of this whole story, gold. And of course, its more volatile sidekick, silver. These two are the ones that really led the charge.
I mean, gold didn't just rally. It went on an absolute tear. It set 12 new records in January alone. It peaked at a mind-boggling $5,400 an ounce before, yes, a sharp correction. But that wasn't a collapse. It was just the market taking a much-needed breath.
And this wasn't just pure speculation driving this. You had this convergence of really powerful forces all pushing investors toward gold's perceived safety. There were worries over central bank independence, all those geopolitical tensions simmering, and this continued trend of de-dollarization. That's where central banks are literally buying physical gold to rely less on the US dollar, and it was all fueled by record amounts of money pouring into gold ETFs.
Now, silver's story is really fascinating because it's being pulled in two different directions at the same time. On one hand, it's a safe haven asset, just like gold. But on the other, it's a critical industrial metal we need for everything from solar panels to electric vehicles. This dual demand is creating what they call a structural deficit, where industrial use is consistently eating up more silver than we can supply.
But this story is so much bigger than just gold and silver. Those same macro forces we talked about created this powerful ripple effect that lifted the industrial metals, the actual building blocks of our modern world.
Take copper, for example. The whole story around copper is shifting. The market is actually starting to price it relative to gold. Now think about what that means. It suggests that people are no longer seeing it as just another industrial input. They're seeing it as a major asset that's valued for its scarcity, a lot like gold itself. Nickel's situation really shows you just how complicated this all is. You see these bullish headlines everywhere, right? Production cuts in Indonesia are sparking supply fears. But the reality on the ground is that the market is still swimming in inventory. It's a classic case of the headlines clashing with the fundamentals.
And if you look across other key industrial metals, you see the same theme again and again, this constant push and pull between a tight supply and really uncertain demand. Doesn't matter if it's aluminum, zinc, or iron ore, you have factors like low inventories and production caps crashing right into a shaky demand picture, especially when you look at China.
So let's zoom back out for a second. We've looked at the precious metals, we've seen the industrial ripple effect, but what's the one big picture that all of these separate moves are painting for us? Let's connect the dots.
Because when you put all of these pieces together, the rally in precious metals, the tightening in industrial metals, the fog of policy uncertainty, a very clear message starts to emerge from all that market noise.
Here's the bottom line. The surge we've just been breaking down isn't just about commodities getting more expensive. That's a symptom. What this really is the market telling a huge global macroeconomic story using the simple language of metals.
All of those individual forces we've been talking about, they're not separate issues anymore. They are converging into a single powerful signal that tangible, physical assets are being repriced for a world where economic clarity is getting harder and harder to find.
And that leaves us with this final, really powerful idea to think about. This whole rally, it's not just a reaction to today's news headlines or data points, it's about tomorrow. The market is looking ahead, and it is telling us, in its own language of price, that the one thing it's definitely pricing in for the future is uncertainty.
Most investors are going to spend the rest of the year just chasing headlines and reacting to fear. But the real edge, the real alpha, is in understanding the underlying structure of the market before it becomes common knowledge. So if you want to keep your focus on the signals that actually matter, this is where we do that.